Kari, it's good to have you here. Your thoughts on this market and what we've learned from this interview with Joe and the president.
Well, it's been a fascinating couple of days, that's for sure. I think that what we've seen, in addition to this question about tariffs and what's going to happen with NATO, is that we keep bumping up toward the highs, and we get there, and there's a backing off. And what we saw was what appeared to be a tipping point right as we're about to hit through new highs, and then there is this fear about what happens with tariffs or NATO or escalation. But you begin to wonder if there's something around the corner that keeps stopping us from getting through those highs, because we've had 3 years in a row that have been fantastic years in the market, 25%, 25%, 18% roughly. I mean, honestly, everybody's been saying 8 to 10% this year. That feels high. It feels to us as if the market really isn't so set on pushing through and back up another 10%.
We've seen this movie before,
yeah.
Quite obviously. And we're conditioning ourselves, and maybe we will even further, to ignore what some would suggest is simply noise. And the fundamentals and the backdrop of what got us here in the first place and what we think is going to take us to the next stopping point in this record-setting rally are still in place.
Yeah, we're definitely in a good economy, right? We know that GDP is growing, there are going to be tax cuts, consumers have money, they're spending money. We also know that what's powered the market are the Mag 7 and Mag 7 adjacents that have moved us to where we are right now. And the idea that we're going to move up another 10%, not on the back of those stocks, but on the back of the rest of the S&P, becomes tougher, because the 300 names that are the bottom 300 in the S&P, I've been asking people all day if they could identify how big those are. That 300, they're roughly the size of NVIDIA. All 300 of those names, the size of one stock. So if you don't have participation from the top names, it's very hard to push the whole market higher without the rest of the market, the lower, going up 30%, 40%. It just makes the math hard to work.
Are we to assume that we are in, at least for the near term, a renewed environment of volatility?
I'd say right now we're on back on risk on. I think Mike alluded to that. Right now, people are feeling good. They don't feel as if we're going to have a war in the North Atlantic. It's pretty good for my 4 Danish grandchildren. And I think the market is, enthused. We saw it react so quickly. But it worries me that we had that big drop yesterday. I mean, it was just, like cataclysmic right there. And, who knows what can precipitate it. But we're not going to have that tomorrow. Tomorrow, I think we could, continue to look good.
What looks the best to you in the market right now? What's going to dominate the story for the year in terms of returns? AI is going to dominate the story in terms of, the environment. But what's going to lead, do you think, this year?
All right. Well, I'll tell you a category, and then I'll look at sectors. So, as you know, I've said healthcare was going to be a top sector. We've not seen it great. It had a very good fourth quarter. Mm-hmm. It's the industries that figure out how to play ball correctly in this administration with this environment that we're in. And, right now the energy companies are looking good because their stocks have been strong. They're concerned about what happens to them if the president has the price of oil capped at $50 or whatever is his choice. So if you can figure out how to manufacture your goods cheaply and sell them at a price that doesn't attract scrutiny, those are winners.
I thought Cathie Wood of ARK made an interesting comment today on the halftime report when I asked her why, if she's so bullish on the AI story, and she owns some of the names that play right into it, she has around 1% positions in the hyperscalers, the Metas and NVIDIAs of the world, and she has obviously had a history with her ownership of NVIDIA, and she talked about the return of invested capital, that traditionally it's been so tremendously high for those types of companies. But now when you're spending all this money and you're not exactly sure about what the return on that capital might be, it could be a bit of a comeuppance in the way that you have to think about those names as to why she has what some would suggest are smaller size positions for even somebody who's so bullish on the story.
Yeah. And she probably had 10% positions in 4 or 5 of them 2 years ago, right? So I would agree that the return on that capital investment is a big issue. And when I grew up in the business at Fidelity, we all were under the impression, and we traded in a way that if companies were beginning a capital investment cycle of huge proportion, that was not the right time to own them. You waited until they began to see the return, the cash return on that investment, and that would not be this year.